Hey traders, this is Ron Haight. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here doing daily charts, and we'll also look at some weeklies on the major indexes. So we're using Thinkorswim, and this is the SPY, the S&P 500 ETF. We can see there's a previous high here from the beginning of September on Labor Day here in the US, and again the middle of October. And then we have a low end of September, and now we're testing that area. We are still range bound. Now, normally, I would say to you, hey, we're range bound. We really have to take out that low before the bears would get a bigger edge. They already have a little bit of an edge because we're below the 50-day moving average in orange. That's the institutional line. But because of that previous swing point, we need to break that too to really give the bears the edge. Now, here's the issue. We have the election here in the US on Tuesday, and we have to see how that plays out. Now, could it go on for days or whatever? Let's not get that far. We want to see what the big money is doing. If the big money breaks this low on a closing basis, the next target would be the double bottom back here in June and back here, mid-June and late June. That's around $298, $22 on the SPY or 220 SPX points. That's a decent chunk of real estate. We break that, then we come back down here to this pivot point. Then we start going whoa and whoa. We don't want to get ahead of ourselves. Now, if Monday, tomorrow, the US market, let's just say it has a bad day and it breaks this low, does that automatically mean here we go? Well, with the election Tuesday, that's such a fixed news event, a fundamental event for the market. We don't know what's going to happen. So a mere break of that on Monday doesn't put this as a high probability target. It would be the target, but Tuesday could completely reverse it because of that basically a fundamental event hitting the marketplace. Who's going to win? If it takes days, is the big money going to be scared? And the fact that we break it on Monday, we're just going to gap there Tuesday. These are all things that could happen. Now, what I've been saying for the last couple of weeks was, this coming into the election, it would be a great time to take that profit. Once we started breaking the 50-day again, which was just what? Let's zoom in. Monday. Tuesday was an opportunity to start adding protected puts to portfolios, maybe 60, 90 days out in time, something like that, or 120 days out in time, near the money for protection for earnings reports if individual companies are reporting, but even on the major index, if I wanted to protect the portfolio. Well, now fast forward, we're down here. The same thing can still be said walking into Tuesday. Don't know what's going to happen. Maybe it's a non-event. Market doesn't do much until we know if there's going to be a clear-cut winner, or are they going to be recounting, whatever ballots, or, it really gets crazy. We start getting that far in. So outlook for the week on the daily charts, extreme caution regardless of what the chart is showing. Yes, it's technically bearish. Yes, we're range bound, but because we're below the 50-day, bears have the edge. And Monday, one more time, we break it. Yeah, that's even more bearish, but Tuesday could reverse everything. So it goes right back to caution. If it's money I couldn't afford to lose, this would already be protected with near the money puts or maybe even collar trades as an example. Now that was the week, that was the daily on the spiders. Let's look at a 3-year weekly. We see the same thing, chop, right? This is not bearish necessarily. The bears would say, hey, look, you have a double top. You have an election that could turn out to be chaotic. Well, yeah, there's a lot of things that could be. On the weekly chart, if we get below the 50 period, which is around 313, that's about $13 lower than where we are right now, 12 bucks. That would be bearish in the weekly, but we have to close a full week. So I can't comment on the weekly chart again until next weekend. Right now, I would say caution just because of the election. Let's go take a look at the Dow. The diamonds, now they're just barely below the 50 period on the weekly. They have a high here. They have not set new highs. We now have a double top. This is not a good looking pattern. However, because of the fundamental event on Tuesday, anything goes. This thing could change on a dime or get a lot worse. Now, if we talk about, let's look at the dailies actually. Let's just flip back. Here's the Dow on the dailies. Not looking good, right? We just closed below those lows on Wednesday. If I was coming to you without an election right now, the whole story would be different. I'd be like, guys, this is not good. Top. I zoom out, never hitting the previous highs. This is starting to roll over. Volume starting to increase. The key area now would be 250. That would be $15 on the Dow, 1,500 Dow points. This would be huge in terms of being bearish. But with the election, we could turn on a dime and be back at new highs, or it could get far worse. So if I was trading the Dow, I told you guys, watch that 50-day. We closed below it on Monday, and all of a sudden now you're here and you're actually below it. On the weekly, of the Dow. Let's go back here. Hey, weekly chart, get back here, 3-year weekly. Again, there we are, just barely below it, but it goes right back to caution. Yes, the bears have the edge. The Qs on a weekly, they're still holding their 20 period. Very, very, very strong. If we go to a 1-year daily on the Qs, peak, a lower high, and now you've broken on Wednesday a clean break of a 50-day. You would watch this low, we break there, that is bad news for the bulls. You have a double top and the bears would get a huge technical advantage. One more time, election, who knows? We got to see what the big money starts to do. But with all that said, each time we crack a low, let's say there's no clear winner on Tuesday, or there is, it doesn't matter. If we start getting a direction and we start breaking this, whether or not there's a clear winner decided, the bears have that edge. And then the target for the Qs, sit down for this one. There were no real major pauses. I mean, technically, it's down here. I wouldn't get that crazy. We could bring in some fibs or something, or maybe a 50% retracement from 300 to 180. That's what, 120 points. So if we take 60 off the top, that's somewhere right around here in 240. Would be about a 50% retracement off that high. But what I'm going to do is if this starts getting really nutso, I'll end up doing a midweek update video. Bottom line, caution. Now let's take a quick peek here at some other stocks. We'll start with Apple. The company had its earnings this past week. You can see here it would have been at 10.29 at market close, and we're getting a push lower. Apple does now have lower highs. It does have bearish engulfing. We want to watch the low. If I was trading Apple right around 104-ish, a break below there, it's bad technical news. But this also ties into the election. It could send the stock soaring, could send the stock crashing. Apple has a gap to fill down around 96 bucks. So if it takes out that 104, 96, that's a target. Coming into that earnings report, I would already have a put in place for Apple if I was protecting my shares. So the put might be gaining a little bit of value, not a whole lot, because there's going to be a little bit of implied volatility decay on that option, but that put would still be in place. I would have had it for earnings and now the election. You're getting a twofer, and when you get twofer opportunities, it's almost even more reason why to consider adding those puts. Google, they gapped up here, about 1667 was the open. They closed at 1616, 50 bucks off the high, but it's still a green candle because we closed higher than the previous day's open. Yeah, we were off the highs, but it was still higher close. Look at that volume. That is massive volume. It almost doesn't matter what the millions per share are, millions per day are. That is a big honking line. Now, what's interesting here is it did not want to go up and break new highs. From what I read about their quarter, it was amazing. They did so well, but they were selling. They weren't buying. Now, this could be twofold. They're selling good news finally. It's all being, quote, priced in since the Corona crash and then the massive rally. But number two, the election could go either way here. Where would I get concerned on Google itself would be taking out this low here around, I don't know, 1400. I might want to put a price alert there because below 1400 things could get ugly in a hurry, just from a technical perspective. Facebook, head and shoulders pattern could be out there. They also were down on earnings. They took out the previous low. You're still above this one, but at this point, this does not look good. I could set an alert at 285 because above there, now that's bullish. But the moment we take out this little swing low, it adds to the bearish momentum. Below here, more bearish momentum. Below here, there was almost like a little mini double bottom. That's a big deal. Then you go back to the bottom of that trading range. So I really haven't gotten into the actual earnings commentary about Apple, Google, Facebook. We're going to look at Amazon next. It doesn't matter. What really comes down to is what is the big money doing? Because you and I can have an opinion, and one of us may or may not be right. But what is the big money going to do in reaction to that report? So far, we're seeing pullbacks in Apple, Google, and Facebook. How about Amazon? They were also down. This stock was crazy, in my opinion, around 2100, right? You would say, oh my goodness, that was a huge run since December into the beginning of the year. Then you go 1600 and then it doubles its value in the next 6-7 months. Craziness, right? Well, maybe some of this is priced in, or maybe it's not. Maybe the big money is saying, you know what? With the lockdowns, etc., still going on, or maybe they're going to continue or get worse, maybe this stock is going to be a clear winner again. All just opinions. I'd rather see what the big money does. So if I zoom on Amazon, before I would feel good about being bullish, I'd want new all-time highs. Because what's happening now is a trading range, very similar to the S&P, very similar to the Qs. We take out this low, which was from, I believe, mid-September, right? Yes, mid-September. The last consolidation point was down in the 2400 area. That's a big drop if that happens. So technically, Friday was bad, but it still has to take out that low to break out of this trading range. Anything bearish now would be considered more aggressive as a directional trade. But here again, the election's Tuesday. Stocks could go either way. So buying a protected put on Amazon ahead of earnings, you would have had a twofer: earnings, election. And you don't always get twofers. About Microsoft, talking about everything being priced in. This stock, amazing run, below 195-ish. Then you start coming down. I mean, there's a little bit of consolidation around 180, but you're really talking about all the way down here. It's going to be interesting if the market really does roll over. This is the window if it wants to pull back around the election, and it's already starting. If the market is happy with what happens, no matter who wins or the uncertainty is gone, we could see this thing just reignite again for a lot of different reasons that we've talked about in the past. How about Caterpillar? If you're watching Cat, they did break the 50-day and now they're rallying. The volume is actually pretty decent, but it would need to get above the 20-day EMA before this would become technically bullish, and then we would have to go back up and hit those highs. So far, there's a one-day fake out. There's a subsequent rally, but here's what I look for. If we can't get through that 20-day EMA and then we get back below the 50, that is a really bad sign, even before it takes out the low. So let's just keep an eye on Cat. Above the 20-day, technically bullish, target previous highs. We can't get through the 20-day, we close lower, we break the 50, it's probably going to cut through that like a hot knife through butter. On Peloton, amazing run. Well, they have earnings coming up on what, 11/5. Get this. You have earnings and election, and on Thursday, it cleanly closed below the 20-day EMA in red, which is something it hadn't done in a really big way since, what, April? There's been a day or two it just dips below it a little bit, but nothing like that. A clean break. Even had bearish engulfing. So now Friday, I have another down day. If this thing breaks the 50, this would be dead on a bullish. The bulls would be dead on a daily chart. Bears would have a complete edge if we break that 50-day. This thing's already cracking. Another two for opportunity: election and technical sell-off and earnings. Three things. How about Target? Had a question on this one. Target's pretty much been above its orange line since April. That all ended Thursday, and you got confirmation Friday. Initial target's 144, only $8 lower, 5% or so. Then you have a gap fill to 138, and then you come back down to this consolidation if the bears start getting things rolling. Chipotle, takeout or drive-through. High, double top, and now you're cracking the 50-day moving average. You just didn't get below it once. Over here, you got below it once, and the bulls were like, we want this, and they ended up pushing it up. The change in sentiment is here. Not only did you get below it, let's zoom in again. Closed the lows of the day. The next day you closed the lows of the day. Friday you closed the lows of the day. And you have a new closing low below the previous closing lows. Everything's been broken. This might look like it's still in a trading range. Technically, it is not. Complete breakdown. The 20-day is about to cross below the 50-day SMA in orange, which is the institutional moving average. That's going to be another sell signal if the stock stays down here just probably another day or two. Volume is also increasing. Not a good sign for the bulls. So this would be a stock I'd consider protection on as well. And then transports, they've been doing amazingly well. On Wednesday, they cracked the 50-day. They haven't done that since May. First time, and now you're spending 2 straight days below it. Yes, there was an attempt at a rally, but there's been no follow through. This is also showing the market is somewhat concerned now about whether it be the election or maybe just the fundamentals of the economy. And then I'll leave you with the semis. They were playing around with the 50-day back in September and beginning of September, end of September. They're doing the same thing again now. This is not a clean break. So somebody asked me, hey, are the semis breaking down? Not yet. They're playing any, hot potato on that 50-day. But with the election, caution is the name of the game. So that's it. Wish you guys a fantastic week. If the market gets very squirrely midweek, I'll be back with a video maybe Wednesday, Thursday. We'll see what happens. If things are calm, then I'll see you on the weekend. So best wishes, and see you in the next video. Take good care.